Hello and welcome to another Major Market Movements End of the Week Market Review for July 24th, 2015. I'm Quad G, and in this video we're covering the FX markets and some of the peripheral markets, such as the equity markets, stock market, and some of the commodity markets, as well as the 10-year Treasury note. I think that about covers it. So we'll step in right away and go to the US dollar here. And I think we've got the makings of a downtrend. I think we can see that may possibly see this continue to this downside. Instead of going into detail here, we'll take a look at the LA wave charts here in a moment. The QG3 is still in a bullish alignment to the upside, but the 3 EMA has contracted some. The weekly closes negative, almost a piercing pattern. We did gap up just slightly and then came back down and closed halfway in into the halfway into the body of the positive candle in the previous week. So it's semi-bullish there, or not, excuse me, bearish. And the EWO, yeah, I can't really, there's nothing really there to grab onto right now. The daily RSI, we did see the price come up above the 60. We didn't quite hit the 70, and we're starting to turn. Looks like it's starting to turn back down. We did come up to the previous spot where the RSI did turn around right about the 65 area. Perhaps this particular market is sensitive to that level and maybe turning around right here. The MACD is slightly open to the upside, but is contracted some on the daily there, and the MACD on the weekly is still open to the downside, with the bearish alignment to the downside. So overall for the dollar, I think we've got the potential for a turnaround here, and I think there's still some bearishness in this market, which we'll go into in just a moment. Let's look at USD JPY here. All right, so this is starting to look like it's starting to turn over. Didn't quite produce a higher high. It really met up with this last swing high here, stalled and has pulled back. This does look like an impulsive move to the downside. 1, 2, 3, 4, 5, and now we've had a choppy sideways corrective contracted flat type count here that looks finished, and so I'm expecting another impulse to the downside to come very soon. And key level resistance is going to be right here at about 124.09. And with that, the QG3 is in a bullish alignment, though it's starting to curl over. The week closes just as a negative candle. That's not particularly bearish, somewhat neutral for a weekly close. And EWO, can't really show you anything there either. The RSI, we did come up. You see the market did test the 60 level and starting to back down from it. So when the market respects the 60 level in the RSI, it's often a sign of bearishness for the midterm. So we keep below that level. I think it's going to cause this market to turn over and start heading down impulsively to the downside for the midterm, potentially. And the weekly MACD is open to the downside, and the daily still open to the upside, though the histogram bars are shrinking, showing some contraction. And let's take a look at the euro. All right, euro on the daily, we close as a possible hangman candle there, only confirmed with a close below today's low, and they're at 109.25. Close on Monday below that level. I'd say that's a sign of reversal, and you start to see us slide further down. However, we keep above that level, very key level of support at 09.25. We could see this market move on higher. Right now, it looks like the 20 DMA is serving as resistance at this point in time. But if we get a daily close above that level, that could be our first clue that that key level of resistance is giving way to a shot up, possibly up to the upper Bollinger Band, which is up here in the 1200 handle. Weekly, not particularly bullish or bearish, very neutral close right there. And the EWO, not really showing you anything there. The daily RSI, we're right here in the middle, right around the 50 level. We didn't break below the 40, so that didn't offer up very firm support. So if this market is bullish, it's going to have to show itself. Going to have to see a run up here and preferably break the 60 level to be a very serious contender for a midterm advance. And euro on the weekly, MACD is open to the upside on the weekly and daily. We've closed out here and now neutral on the daily MACD. So overall for the euro, I see some in the short term. We could continue to see some weakness with the daily closes underneath the 20 DMA. Elliott wave speaking, there is a chance of a turnaround, but we may need to see another lower low, and I should go into that in a moment. All right, let's look at the Dow here. They'll go into the equity markets with a great level of detail, probably more detail than you care to look at, but there's lots of indications flashing bearish right now. The Dow solid close into the day, solid close lower in the week. We closing well below the 200 DMA again, and the 50 DMA, this orange line, is starting to converge upon the 200 DMA. Again, if the 50 closes below the 200, that's the bearish death cross in this market. That's led to some bearish bear markets after that's happened. So we'll see whether or not in the weeks ahead we're going to get that signal. But for now, the 200 DMA definitely not holding up as support as it's done in the past. Last time the 200 DMA was tested, we got a nice solid bounce out of it. Not this time. We've broke below it, bounced up, and now we're back through it again. And I think this is the first time we've done that in such short order in this market. I mean, we saw a huge violation of the 200 here, but it shot right back up and just kept on going. It never doubled back and came right back through. I'm trying to think of a situation where we've done that before anytime recently. We didn't. We got a little bit of a break there, but then it bounced back up. And let's see, go back up here. That was just a quick break and bounce, retest, and then continue on. This to me does not look like a retest. It looks like a solid break, especially on this weekly close. It looks like it's completely ignored the 200 DMA as support. And also on the weekly here, we're getting a very bearish outside double key reversal on the weekly. It's very bearish, setting a very key top at this week's high at 18,137. So I expect to see some more follow through to the downside coming up in the next few weeks. EWO, can't really show you anything there either. This has been, there's a long procession of negative divergences that may be finally paying off here. You can see all the way back here, we've got 1, 2 negative negative divergence closes on the EWO with lower lows in the oscillator, even though the price moved on higher. The RSI, pretty much the same thing. The market was not able to bust above the 60. You can see it capped there like it was back here at the previous high. So we know that the market is respecting the 60 level, and that can be very bearish. Now, if we're going to, if this signal is going to develop start to develop a midterm bearish cap to the downside, we need to see this market come down and test the 30 level or even break it. And right now we're currently just under the 40. You can see that's not providing any support. And so the expectation is for this market to come down to the 30 level or even lower to really reinforce the idea that we are in a midterm bearish trend. The MACD, back up here, MACD did close crossover, and we are in a bearish alignment to the downside on the MACD on the daily, and then the weekly is continuing to be in a bearish alignment to the downside, which has persisted ever since the top back here, back in May. All right, and crude oil. Crude oil continuing to drop off. We're closing underneath the 3 EMA again. So we're continuing into this bearish trend. It looks like the week closes solidly lower. And the EWO not useful. The RSI on the daily, we do not have a positive divergence on the bottom there yet that I can see, and the MACD is open to the downside on the daily, and the weekly closed out is become neutral. So overall picture for crude still looks like it's in a bearish move to the downside. That could change with possible Elliott wave count, which I'll show you here in just a second. Let's see here. Let's go to, yeah, we'll go here. And we'll take a look at, here's the dollar index. There's one reason that I favor a 1-2-1-2 count is because we have this completed 5-way move to the upside. Yeah, I don't believe that we've had a deep enough retrace yet to for at least a corrective wave to the downside, and also this move to the upside looks very lazy. It doesn't look impulsive, so I expect at least another one leg lower for a C wave, possibly a wave 3 of 3 could develop here very soon as well. There's some manic moves to the upside here, and here that were never backfilled. So this is the job of this move, to fill in some of that manic behavior to the upside. Even all the way down here, we see all this manic jump that's never backtested. So plenty to do for this wave to the downside. I think it's best to be ready for a short in the near future. This is a daily chart, and where TradingView restricts us from going into the intraday, hourly, or even a minute views there, timescales. But you can see on the day we did close as an inverted hammer candle there, so that could be bearish and lead to an aggressive move to the downside coming in. Here's another chart that shows that. A little zoomed in here. I think we could be working on a wave 1, wave 2 may have finished today. I want to see a little bit more proof before diving into that, and I'll show you on another chart here. Not here. Let's look at it. Yeah, I can get some detail here. let's look right here on the dollar. And we'll zoom in on it. Let's go to the hour. Okay, so if the dollar did top off here, we do get a nice impulse to the downside. So I think this could be a wave one here. We'll get a wave two up, wave A up, wave B down, because this doesn't look like impulsive. It does look to me like it could be just uh, a an ABC move to the downside, and now we've got three waves up. 1, 2, 3. This could be a fourth wave, maybe one more little push up into a fifth wave. So you have an ABC 335 running flat, maybe that could take shape. And then once that's done, we start capitulating to the downside. The key level of support is going to be this wave 2 low right here at about 97. We see the market break that first before popping up, then I'm going to say, yeah, this market's ready to start impulsing to the downside. So while we're above that level, I think we could see one more incremental high, maybe to fill in this little manic drop here or even up here. And I think the euro does a really good job of showing it too, which we'll look at next. So here's the euro. Here's that initial wave one up, ABC down. This structure, boy, you could split hairs with this one as far as it counting as an impulse or a double zigzag. Really, I think if you wanted to count it either way, you could. But based upon this leg that's coming to the downside, I do see the potential for this being a 1, 2, 3, 4, and a 5 wave move to the downside to complete a 3, 3, 5 running flat. And that 5 could shoot down here, maybe test the 38.2% Fibo of wave 1, and then from there shoot on higher. So we'll just have to wait and see. If this move up today had been a little stronger, a little more impulsive, maybe have challenged these levels again, I would have been a little bit. I would have sided with this being an initial, maybe a subwave one to the upside. But because this is so lazy right now, maybe it's just jitters going into the weekend. I don't know, but I'm gonna have to side with the possibility of we get one more leg lower for now. USD JPY, here's the long-term count. We got a wave 1, 2, 1, 2, 3, 4, and 5. Looks complete for a major wave 1. So with a major wave 1 complete, I think major wave 2 to the downside could be starting to roll. And if we zoom in on it, I'm seeing this as a initial wave 1 down, an A, a B, C with a expanded 335 flat for wave 2, and now working on another impulsive series to the downside. Got wave 1 in, wave 2 looks in, just waiting for wave 3 to develop. Now, could this be inverted head and shoulders pattern, possibly with a bullish outcome? Yeah. We could just be coming back here for a back test of that blue trend line, and that's all before we push higher. That's certainly possible. But we're in a good position here. It was a low risk entry, so we might as well write it on out for at least a short initial gain, possibly much more if we capitulate in this market to the downside. All right, now the equity markets. Here is my breadth indicator for the SPX, or the stock market in general, if you would. I do think, I've been talking about this top, and I've been trying to nail this top for a good long time, but it's just been advancing in this very choppy manner. It's been very, very difficult to get a hold of. But all the while, it's just been building up this huge negative divergence. negative divergence, which we saw similar action, though a bit more abbreviated, back in 2007. We got the warning shot with this huge drive to the downside that broke below the lower 52-week Bollinger Band. And ever since that warning shot, this advance has been very slow and choppy. And I think it finally might be rolling over here as we can start to drive down into the lower Bollinger Bands. And also the 52-week average, basically center line of the 52-week Bollinger Bands, is continuing to move down, and we're getting very, very close to that zero line. And so I want to go back over with you. I've shown this many times before, but I'll go back with you over again. Here's the 2007, 2008 movement. Here you got the warning shot to the downside, or you could say that this was maybe the first warning shot. We got the second here, letting everybody know, hey, this isn't looking good. And we slowly moved over, and right here, we've got that 52-week average came below the zero line, and we got a bearish crossover of that line, and that's when everything started to accelerate to the downside after that happened. And basically what this is, in case you're not familiar with this indicator, is it's the new 52-week highs minus new 52-week lows. All right, so that's what that blue line is. And so, as you can see this week, we've got approximately 274 new 52-week lows, or more lows than the new 52-week highs in the stock market. So that means that, like last week we had, what was the last high we had in this market? Last high was here, right? So right back here, we had about, at that top, we had 65 new stocks, different stocks, and we had a net gain of 65 stocks moving to the upside. That means the thousands of other stocks were either not experiencing new highs or were making new lows. All right, so this you can see that fewer and fewer stocks have been carrying the water for this upside move in the Dow. And so finally, with this reversal, we could be, this is the SPX, by the way, that I'm showing here below. And the SPX looks like it, let's see, that open was at, open was at 2080, and this close is at 2079. So we did get the outside Q reversal on the weekly on the SPX as well. So all this indicates that there's some severe weakness in the market, and it looks like it's continuing to persist. No signs of turning around right now. Here's the Dow. Here's my crown formation. The second right shoulder looks like it's complete. This hasn't updated for the day yet, but we closed down here in the 17,500 level, quite a bit lower. And this also proves that if we go to the daily, or that is the daily, but let me zoom in on this, that this move to the upside from this last low was only 3 waves up. We got an A, B, C. Looks like it's to the downside, and we got now an impulsive drive to the downside, wiping it out, confirming that that was just a corrective move to the upside. Now, it may not be over. We may not just fall off the face of the earth with a drive to the downside. I think this move could potentially see some support here right around the 1700 level, maybe even dipping below it into the 16,000 level. I said 1700, 17,000 level. We could see a break just below that, and maybe another move to the upside to mimic this last big shoulder here. We could get one more shot up here into the right shoulder. I see that as a possibility, maybe into the October time frame, which would drag it up to about here. Drag it out to about right there, maybe. Maybe the final shoulder. And the other reason I think this might be another final shoulder up here is the fact that this week we had this huge shot down, this manic drive to the downside, never got back tested. Um, I don't like that sitting out there. I'd prefer it to be cleaned up at some point. So I'm going to leave open the possibility that this move to the downside finds some support right down here in the upper 16,000 level, and then maybe we bounce up into October, which is often a typical time frame for major stock market tops. We fill in that this manic start to this drive to the downside, clean up that mess, and then we'll be in really good shape for a major top and continued capitulation to the downside thereafter. All right. Okay. Let's move on here to here's my YM. This is the mini Dow futures contract. I'm kind of using it as my my tool to gauge where we're at with the micro count. And it does look like to me we've got wave 1, wave 2, sub 1, sub 2, another sub 1, sub 2. May have crossed the point of recognition right here today. They're at about 17,593. And so my expectation is while we're below wave 1 there, and that wave 1 low in the YM is at 17,627. As long as we're below that level, I think we'll continue on to the downside to flesh out this impulsive drive, which may not have any problem with coming all the way back down here for YM, coming all the way down here to 16,964, something like that, before we see another bounce. All right. Let's see. Here's the NASDAQ. We've got, here's the weekly. Again, we see this huge negative divergence that's developed over the course of several months, starting all the way back in 2014. If we go to the daily, again, we see the huge negative divergent buildup here over the course of, again, all the way back here. I guess you could call it way back here in June of 2014. It's just been a very sloppy, choppy affair. Lots of false signals suggesting a top, but just not quite making it. The previous week, we had this huge impulsive drive to the upside, leaving just this gap-happy mess. And so this market may be coming down here to fill in all that and maybe show this as a proof this as a just a blow-off top. If we come and shoot right back down, right back into the 4,300 handle coming next week. Here's a zoomed-in view of a micro count that I'm developing. Wave 1 looks finished, A, B, C looks finished, and now for a wave 2, now working on wave 3 to the downside. Here's the NASDAQ 100 again. This is just a longer term view. The 100, unlike the composite, is still shy of making a new all-time high in the market. And also, you see this long-term supporting trend line all the way from the 2009 low is supported at multiple times. We got a break below it. Looked like it was going to fall apart, and then we get this shot right back up. And but a failure, again, another failure to reach the upper trend line resistance would be bearish, especially come down here and break below that 43, 44 level. That would certainly be a good sign that we have finally topped out in this market and going to see a slide. I do think we'd had a nice impulse or nice ending diagonal pattern here. It was going along really nice, but you know, the market makers probably sensed a bunch of shorts up here with their stop losses and decided, hey, let's just flush those guys out. So they did, and now they may be ready to short this market as well, and so that might um, well, we'll still have to wait and see if that's what's going to happen or not. And I think that 43, 44 level is going to be the key that lets us know whether or not we've actually finished this drive to the upside. Here's the BKX, banking index. This is another one I've been tracking for a good long time. ABC looks like it's finished for a wave B, and now expecting a very long multi-year drop-off in the banking index. And it looks like this pattern could be finished here with wave 1, 2, 3, 4 flat, and now 5 to the upside could be finished. And if we zoom in here a little bit further, we've got wave 1, 2, 3, 4, and now 5 looks finished. This is a weekly chart, and when the week does finish with the inverted hammer candle, setting a key high there at 80, 87. To really confirm that we've got a top in here, we need to see this market continue to sell off and break below that 70, 75 level. Break below that, and I'd say our top is finished. So ETFs like FAZ would be a good vehicle to jump into to take advantage of the potential impulsive drive to the downside. Okay, and I got a few more markets to look at here. Let's go back to here's a 10-year note. And this is the count that I'm favoring at this time. It looks to me as though we've got wave 1, wave 2, sub 1, sub 2 finished. And now we've got a initial impulse to the downside for a wave 1. And now we're working on a 3-wave move to the upside that looks like it could be almost finished. Almost finished. Of course, this count is going to be dependent upon the price keeping below, say, about 127.18. You break above that, then this count is dead, and we'll have to take another look at it. But for now, it does look like we've got A, B done, and now we're working on C of 2. Very close to finishing up here, possibly next week. Crude oil. Here's that count that I'm looking at. Looks like wave 1, 2, 3, 4 is done. Now working on wave 5. Wave 5 looks like it still needs some more downtime with a wave 1, 2, 3, 4 yet to be seen, 5 yet to be seen. Maybe testing the 78.6% Fibo right there at $46.43, possibly there. Also, we've got this manic move to the upside that got a little bit of a back test or a backfill, but it may want to come down that far as well. So right around 44 it would be a possibility, but we'll keep our eyes on it for now. And we'll have to wait and see when it decides to finish up. And when it does, I think it might be a good place to try another long side bet for a shot up here to at least 55, maybe 56, maybe even 57, somewhere in there to fill in this manic drop. Natural gas. Natural gas, just really confusing here. Wave E is still in effect. It didn't break above wave C, so this could still be a wave E, and it could still see a strong wave C to the downside yet develop. This does look like an initial impulse for that type of count, but I'd want to see a sloppy 3-wave move to the upside that fills in some of that manic drop on Thursday. The other possibility is that this is just a back test of this rule of 4 breakout on this blue trend line. We're just back testing it again a second time. And if that's true, we need to see this market move up very quickly, right back up to 95 or higher, breaking that wave C high, and that could start an impulsive drive to the upside. So just a very tedious neutral spot right here. Really just need to wait and see how the market's going to behave before jumping in one way or the other. Here's coffee. Been looking at this coffee count. It looks like it could be nearing completion with a wave 1, wave 2, 3, 4 looks complete. Now wave 5 looks like a choppy 3-wave move for an ending diagonal. ABC maybe nearing completion. Maybe not quite there yet, but possibly very, very close. So we'll be watching for potential completion. This is coming down to fill in this manic move that we took advantage of back here in early 2014. So I think we'll fill that in, maybe test the 1.618 external Fibbo retrace of wave A, or excuse me, wave B for wave C. So right about 116 could be just a prime spot to look for a bounce. Maybe the major completion here of C of B or even 2 before we see a major wave C or major wave 3 to the upside. Not sugar, corn. Here's a long-term count that we've been looking at for a very long time. Back out to the weekly here. Wave 1, wave 2 looks like it can be complete over the 335 flat. Now we're starting maybe an impulsive series to the upside. I was paying attention to this market, believe it or not, back when we were working on this wave 2, but there wasn't anything really here telling me, yeah, wave 2 is complete until we got this shot up, and it was just this huge manic drive. So didn't really give us any low risk entry opportunities there. So, but we may be getting that opportunity fairly soon. Let's go to the daily. So we kind of broke out above this trend line and it just zoomed right back up here. But it looks like a nice, clean, impulsive move with an 1, 2, 3, 4, 5. And now I'm expecting a 3-wave move to the downside for wave 2. It may backtest this breakout point right here at about 383. But we want to see that in a 3-wave move. And right now, I can zoom in this a little bit further. Right now, it looks like we got a standalone impulse to the downside here with a wave 1, 2, 3, 4, and 5 to the downside. So I think this is probably just going to be wave A of 2 once it's finished, and then we'll get a B wave bounce, maybe fill in this manic ugliness right here for a B wave, and then one more drive down lower to maybe fill in or backtest that 383 level, maybe even fill in this little manic move here to the upside. Fill that in, maybe down here in about the 370, upper 360 level. I see that as a possibility. And then that's going to provide, hopefully provide a really nice low risk entry for wave 3 of 3 to the upside in the weeks ahead here, which I think wave 3 of 3 to the upside should have little problem coming all the way back up here to the 800 level for starters, possibly much, much higher after that. As you can see, over the decades in this market, let's go to the monthly. I see it as a wave 1 completed all the way back here in 1974, wave 2 completed back here in 2000, and now we're just starting a major generational wave 3 move to the upside. Which, if this is true, folks, this means we've got some serious inflation problems ahead. I don't know what the Fed's going to do. I don't really care what the Fed's going to do, but I trust my Elliott wave charts more than I trust the Fed with whatever their policy they're going to come up with. But if this Elliott wave count is true, and we've got a major wave 3 of 3 to the upside, the price of corn, you could see it go up easily 10 times from where it's at right now. So if we're looking at the 400 level right here right now, you could see it's hard to believe, but yeah, I think you could see corn, if this count is right, soar up to the 4,000 level. That's just for beginners. It could go up much higher than that, but 4,000 would not surprise me. So you're looking at the price of corn moving up tenfold. What do you think that's going to do to the price of food? Your tortilla chips could get expensive if this Elliott wave is correct. I hope it's not correct. I hope I'm wrong here, because seeing that kind of price action is going to hit a lot of people in the pocketbook pretty severely, I think. So, yeah, you could get in long here and you could ride it up, but that's going to be that type of price movement in food is going to be painful for many. So this is a chance to hedge against higher food prices by getting in long in this market. So, all right. So enough of that. This concludes my coverage of the peripheral markets and the stock market and what have you for the week. I hope you all have a grand weekend, and we'll see you next week. Adios.